Fundamental analysis is king. Well, yes and no. Fundamentals, this may be a piece of economic data, it may be a change in central bank policy. They can move markets, but not necessarily in the way you expect. And also they can reverse quite quickly. An example in point, we recently had some US inflation data out for August. Both the CPI and the PPI came in hotter than expected, showing that inflation is still an issue. Now, that should mean that the Federal Reserve will go on keeping rates higher for longer and may even raise them further. That should be bad for stock markets. But what did stock markets do? They rallied. So, just following the data, you'd have probably been on the wrong side of the trade. And it's not just short-term data points that matter. Take, again, interest rates. It was back in November 2021 that the NASDAQ 100 peaked before falling sharply. Now, in that time, inflation had doubled between April and November 2021, and the Federal Reserve was behind the curve. But they didn't start tightening until March 2022, and that's when the NASDAQ bounced. Again, it's very easy to be wrong-footed by fundamentals, so keep in mind technical analysis first, fundamentals second.